Scallops are J-shaped patterns that form in ascending and descending markets. In ascending scallop, bullish, formations, the pattern resembles a J letter and has a rounded bottom with a steep ascent. In descending scallop, bearish, formations, the pattern looks like a mirror image of J. Usually the volume between the top peak and the bottom J peak resembles a U-shaped formation. In ascending and descending scallop formations, the higher scallop size or lower scallop size becomes smaller as they progress. Scallop patterns are relatively easy patterns to trade and have a moderate success rate compared to the flags or other continuation patterns. Trading scallops. Descending scallop patterns are visible once the bottom part is made and the price starts to rise. Also, descending scallops are potential short trades once prices trade below the low of the curved bottom. In ascending scallops, after the first J scallop formation, a retracement is needed for another J scallop. Depending on the market strengths, the retracement is from 38% to 62%, and hence the failure rate in ascending patterns is relatively higher than descending scallops. Placing stops. In descending scallops, the trade is initiated below the low of the pattern. If the prices rise back above the right side of the J peak, then the pattern is considered as a failure. In ascending patterns, a stop is placed below the low of the J pattern. What is the target? Targets are usually at the height of the J pattern from trade entry. For ascending patterns, the height of the J shape is added to the entry. In descending patterns, the height of the J shape is subtracted from the entry. Trading ascending scallop pattern. In this chart, an ascending scallop pattern from Amazon's daily chart is illustrated. Amazon formed its first ascending scallop from $36 to $42. A retracement is needed for this pattern to trade another upside scallop pattern. After a steep decline, Amazon formed a round bottom at $37 to $39. Once the pattern started to break out of the round bottom, it gave an opportunity to enter a long trade. 1. Enter a long trade above the right side hump at level A, $39. 2. Place a stop order below the low of the second scallop bottom, $37. 3. Targets are placed at the height of the first scallop from level B, $42. Trading descending scallop pattern. In this chart, you can see a descending scallop pattern formation from the XM Satellite, XMSR, daily chart. XMSR formed its first descending scallop in March 2006 as it declined from the peak of $30.50 to a low of $20. In April 2006, XMSR retraced above $24 and started to decline to form another descending scallop. The first scallop height was $10 and the low was at $20. 1. Enter a short trade below the low of the scallop at $20, level A. 2. Place a stop order above the high of the inverse J at $24, level B. 3. Place a target at the height of the J shape from level B to $14, level C.